All right, guys, here we go again with another of the Evolution Consulting market update pieces. This one being recorded for 23 of 2016. All right, and that is a Saturday. And in case you guys couldn't tell, it is Casual Saturday here at Evolution Consulting. We also have Casual Friday, Casual Thursday, Casual Wednesday. You get the idea. All right, but a couple of things that I did want to go over. Okay, and that is, I oftentimes leave some things unsaid, as the EA has pointed out on a number of occasions. I don't make the assumption, but I go on the analysis that there, some things I just don't have to say. It's kind of there in plain sight. But the reality of the situation is, guys, something I haven't mentioned. I mentioned it in an article once, I should say, but I haven't really done a video piece on it. I haven't really used it or mentioned it in conjunction with a lot of these metals trades, guys, that are up, 40, 50, 60, 70, 80, 100%, okay? And that is something called a trailing stop. Okay, we like trailing stops. Trailing stops are a very easy way for both active traders as well as the more hands-off 30, 60, 90-day trade kind of guys. I call it the extended swing trade, to really mitigate your losses. Okay, so basically the way it works is, for those of you that don't know what a stop limit is, if a stock, you can put a standing order in, and if a stock ticks below a certain price point, the next tick, it'll execute the trade, all right, and sell. And the reason you want to put that in place is so you don't wake up one morning and all of a sudden your 100% 100% gain in an equity has been either completely or partially erased. You want to protect against that, right? So we put stop limits in place. Now, where do we put those stop limits in place? Depends on the equity, and it depends on your individual goals, okay, your individual risk tolerance, all right? And this, as the slide says in the beginning of all these pieces, okay, we understand that everybody's risk profile is different, so as we always do, we encourage you to sit down with your respective financial professional and discuss the stuff that you hear from Evolution Consulting. Again, if they have any questions or if they have any comments, they want to know more, that's fine. Info@evolutionconsulting.world is the email address. We will be happy to respond to any questions, especially from financial professionals. We don't mind that kind of stuff. We actually very much enjoy what we do here. Nonetheless, trailing stop orders, all right, on a 3x long gold ETF, for instance, where you're going to get those swings 3 times the volatility of the metals market and the derivatives that those are predicated upon, and those futures contracts that those are predicated upon. Just as a rule here, what we like to do is we leave it a little bit more room, okay? You give it a little bit more room to run, because as we've seen, we're starting to see metals prices mow down the resistance, as we like to call it, all right? And you see these $30, $40 up days, and all of a sudden it's give 20 back. $50 up day, give 15 back. Like those kind of things, we've talked about that quite frequently. That's the fairly glaringly obvious and the last death throes of a dying system. Which is the Anglo-Western banking system. For those that have been following along with metals, you know that the Shanghai Gold Fix came online the 19th, and they are, as they say, just getting warmed up. All right, now, in terms of putting the stop losses in place, now those 3x leverage, and it works, it depends even like UDOW, for instance. Those 3x leveraged index ETFs, sector ETFs, all right, they're going to move, obviously, a little bit more volatile. So what you want to do is you want to put your trailing stop, okay, which is, again, it's going to move if you have a $100 equity, okay, and you put a 10% trailing stop, all right, it's going to be at $90. If the stock drops below $90, it's going to sell out of your position because it's going to avert you having to deal with any further losses. All right, now if that equity goes up to $110, all of a sudden your trailing stop moves up to $100 because now you're 10% in the green. If by some chance that equity takes a dive, okay, you protect your earnings, is what we're getting at, okay? Or at least in that instance, you'd break even, you'd mitigate your losses. So, in terms of these 3x leverage, where you do get that volatility, and guys, if you've been watching NUGT, JNUG, GDXJ, USLV, you know those price swings are starting to get wild now because we're starting to see the movement in the metals markets going higher, higher, higher. And that's the futures contracts and the derivatives that are in those ETFs that are causing that, okay? But in terms of as a matter of just economic pragmatism, Gordon Gekko, for those of you that have seen the movie Wall Street, which I consider required viewing, if you've seen the movie Wall Street, okay, you know the phrase, the iconic Michael Douglas phrase, greed is good. And guess what? He's right. Greed is good. Greed does work. But at the same time, so does pragmatism. All right. So let's take a look at. We'll put up a couple of charts here. Okay. JNUG, which we recommended in early March. And up with that graphic, please, through the miracles of modern editing. Okay, we recommended it in early March, end of February, early March at 59.26. Okay, and April 16th, we did an update piece similar to this one. Okay, and it was at 66.31. And today, April 23rd, 2016, it is at $121.46. Guys, that is 104% profit. Okay, and it's been as high as $140. All right, so suffice to say, we won on that one. All right, but if you got 104% profit, if you're still in the trade, all right, and for some ungodly reason you don't have a stop loss under it, please, please, please put a 10% stop in place, okay? There is something to be said for pragmatism, all right? NUGT, and I'm only using these two as examples. This applies to all the trades that we talk about, okay? There is something to be said for a trailing stop. There is that market volatility these days. You got to remember, we're in a news-driven market primarily, so there is something to be said for trailing stops. We take a look at, once again, miracles of modern editing, up with the NUGT chart. Okay, it's another one of our paper metals ETFs. All right, we recommended that early March, end of February. We were at the $51.18 per share level. All right, and we checked in April 16th. All right, and that was at the 78.12 level, which is not a bad score. And then we check in today, April 23rd, 2016. We're talking $81.34. Guys, that is a 59% return on your investment, okay? And that NUGT has been as high as 95, damn near testing the $100 level. Okay, I don't think I need to reiterate the fact one more time in case I sound like a broken record. All right, get a stop loss under 60% in under 60 days on an equity trade. Okay, we're getting used to it. Okay, we're getting very used to it because we have the luxury, we have the Evolution 4.0 system. So to be ahead of that smart money and to be ahead of the institutional money, guys, it's getting to the point now where I don't want to call it easy. It's still tremendously hard work, but the system that we've designed and the system that we built has become so ridiculously accurate. Okay, especially Evolution Ultra. We haven't even really turned Evolution Ultra loose yet. All right, but get the stop losses under those. Okay, we mentioned in the podcast, in the Precious Metals Investing podcast. Okay, we were like, we basically alluded to the fact that you guys, you're up 104%. Take some of it. Take some of that and go down to your coin shop and buy physically good delivered metals with it. That is the whole point of this exercise, is to use the market's natural forces. If you remember, for those of you that listen to the podcast or you listen to some of these updates, you'll say the only thing that institutional, and when I say institutional, I mean sovereign level, national level, institutional banks and central banks like the Federal Reserve, the ECB, and the Bank of Japan can do, the only thing that they can do that we can't do as retail or even as most institutional investors, okay, is dictate interest rates, which, as I've said, who really cares at this point? I mean, what are we, ZERP, NERP? Who really cares? So toss that out the window, right? The other thing that they can do is print money. Now, what we have done here, and I said this in the podcast, I said, au contraire, we can print money. And we've proven it here, okay? What do you think we've done? We've leveraged their idiotic monetary policy. We've leveraged ZERP. We've leveraged NERP. We've leveraged Bank of Japan, probably going to roll out another 80 trillion yen stimulus package. We were proven correct, by the way, on ECB keeping the rates at zero. You don't have to be a rocket scientist. You don't need Evolution 4.0 to figure that out. All right, and as far as the United States goes, get ready for the Securities and Treasuries buyback, ECB style. That's not a stimulus package, but oh wait, it is a stimulus package. All right, so that's all coming. That's what's fueling this market now, is ridiculously low interest rates and an asinine amount of liquidity that hasn't even really started pouring in yet. We've seen, in terms of cash and money, we've only seen a little teeny trickle of a freaking flood that's coming. Okay, and I won't go into it here, but the Zimbabwe dollar, the Weimar Republic, German marks, okay, that is kind of associated with hyperinflation, which is the movement of markets higher. That money has to go somewhere, and when it goes into corporations, it goes into banks, okay, inevitably it's going to end up in capital markets, and that is what's fueling this market, amongst other things, like ridiculously low interest rates, for instance. But as you can see, we have successfully proven our point, which is, can you print your own money? And the answer is absolutely you can. 104% on JNUG, you just doubled your money. You just printed money out of thin air. Now, here's something else to consider also. Has the spot price of gold which JNUG and NUGT is based on, has the spot price of gold gone up at all in relation to 104% on your money, for instance? And the answer is no. It's still in the same range. So what you've just done is the exact same thing, or if you made these trades, what you would have done is the exact same thing that the sovereigns are doing. They're doing this. They're making, paper. Yeah, you gotta have some more fiat currency, have some more paper, right? And they're going out and they're purchasing up the available supply of metals. Now, if you go down to your local coin shop, you're doing the same exact thing, okay? You're taking paper, fiat currency, US dollars, or for those of you that are listening around the world, your respective domestic currency, and what you're doing is you're making more of it to go out and purchase what is going to have the purchasing power after the global economic reset, which we once again forecast for Q3, Q4 2017. But yes, the point of the story, guys, is we're doing really well. All right, and we have some more recommendations coming. Probably Tuesday, Wednesday, Thursday range of this week. Okay, we're researching a new sector. But guys, protect the earnings. I mean, we did really good here. All right, and the other thing is also, for those of you that did get stopped out, if you had stops in place, or if you're going to love this, but if you haven't purchased these yet, all right, there is something called a short covering rally coming, guys, on not only metals, okay, guys that held short positions, because metals have moved up significantly, though, or not completely significantly, but they've moved up enough that there's going to be some short covering. But how would you like to have been the guy that shorted JNUG or SLVP or USLV? Okay, there are people out there that took the other side of this bet and they shorted these equities. Okay, so they're going to have to step out into the market and they're going to have to buy those shares on the open market. Okay, that's a short covering rally. That increased buying action is going to drive these higher. If you're not even in these trades yet, now I'm going to say this with a straight face. If you're not in these trades yet, we have 104% profit on JNUG. Ready for this, guys? Current levels. Buy them. Just do it. Okay, because they're going higher. We've already seen it test 140 in the middle of a short covering rally. All right, we've seen these move higher on down market days and up market days. So that tells you something about where the institutional money is going. All right. These are looking real good at current levels, as if you haven't acted on those trades yet, okay? Because the short covering rally also on the indexes, stuff like UDOW, it's going to be very interesting. And if Apple turns around and returns earnings, like we have a funny suspicion that our research indicates they're going to, that is going to move the market way higher. All right. So that being said, one other thing real quick, and like I said, I try to keep these about 15, 20 minutes long. Okay. One of the other things that we wanted to make mention of, again, in the department of stuff I just kind of, I don't want to say assume, but stuff that I just often leave unsaid. None of these JNUG, NUGT, USLV, none of those are metals investing. Okay, that's not investing in metals. That's using the natural forces at work in the metals market to our advantage. It's using the natural inflationary forces, the natural speculative forces of a market that largely doesn't trade on any fundamentals anymore, certainly to our advantage. But guys, that is not investing in metals. GDXJ, GLD, NGD, ABX, okay, none of those are metals investing. Metals investing requires you go down to a coin shop or you speak to an accredited metals broker for you to physically hold metal. Okay, that's a metals investment. These are just trades. These are not, and please do not confuse any of these recommendations with metals investing. Okay, it's an equity speculative trade and a means in which we go out and acquire more metals, which ultimately will have the purchasing power after all the fiat paper goes up in a ball of flames. But the reality of the situation, guys, is those are not metals investments. It's just something I wanted to say. There it is. The reality is, like I said, I kind of joke around about it, but there is truth in every joke. I said, how'd you like to, if the dollar loses 70% of its purchasing power, the market drops 5,000 points in one day, how'd you like to be on the phone with Direxion or iShares going, yeah, hi, Direxion, iShares, how many ounces of gold can I redeem my shares of GDXJ for? Okay, they're going to laugh their ass off at you, and then they're going to hang the phone up. All right, it's not going to happen. So these are not metals investments, these here. Okay, that's not a metals investment. That is a paper trade. It's just using natural speculative forces at work in the market, combined with idiotic monetary policy by central banking and some sovereign level banks, and not all of them. Okay, but many of them, enough of them, certainly in the EU and the US and BOJ and the Anglo-Western system, that they're creating the ideal environment, okay, for people that actually know what the hell is going on, like us, for instance, okay, to go out and do damn near the same thing that the sovereigns are doing. And it proves another point that I said, which is one of the reasons I like metals investing so much, is because at the end of the day, it really is a level playing field. And like I said, there's plenty of guys out there that are going to whine and bitch and moan and complain. We know damn well the metals market's being manipulated. We know damn well that the equities market's being manipulated. At the end of the day, slow clap. Okay? We don't care. Okay? We just want to profit from it. That's it. Okay? There's certainly going to be the repression of metals. Okay? There's going to be penalties for that. There's going to be serious penalties for that when it comes out who's responsible for it and all that good stuff. But until then, all right, we have a fairly low price on metal, guys. $1,200 an ounce. $12.35 an ounce. Spot price value compared to what the purchasing power is going to be post Q3, Q4, 2017, where we forecast or project the currency implosion to either really happen or at the very least begin. Compared to what you can do in the equities markets now, especially as more U.S. dollars start flooding in, especially as more euro dollars start flooding in. And there's the stimulus package in the QE. I don't know what we're up to in QE, the TARP, the NERP. All those things are that's what's driving these markets higher. Okay, it's got and news, of course. It's got absolutely nothing to do with market fundamentals. We don't pretend for a second that it does, but we do realize it happens to be a very handy vehicle to convert paper into more metal, which ultimately ensures and grows and protects your purchasing power, which is what we're all about here. Insofar as these paper metals investment, guys, like I said, short covering rally coming up in the metals sector, in the mining sector, probably starting this week at some point. That's going to send those, according to our research, according to Evolution 4.0, it's going to send those paper metals trades much, much, much higher. Okay, and you got to remember also, we have the fundamental, which is a short covering rally. We have the news-driven stuff. Okay, CNBC and MSNBC, like Fox Business and Bloomberg. They're all going to latch on to the easy story to tell. Right? They're going to latch on to and they're going to run with, is metals mining the right sector to invest in? It's going to be like, been there, done that already, like that kind of thing. So they're going to push those stocks high because it's the easy talking head news story to sell. All right, so there's going to be a lot of forces, of course, the natural inflationary forces of the market behind it. Again, we got more earnings. And by the way, guys, you saw this week, it's almost like how short attention span theater. A lot of these earnings reports and stuff, that used to move the market for weeks on end. All right. Now, big companies report earnings, and it's like, by 12:30, they report 9 o'clock in the morning. By 12:30, it's already forgotten about. That's short attention span theater. That's what we mean by that. All right. But when the big companies come out, they do beat earnings. They do tend to drive the market higher. It's almost like an excuse to just go out and start buying. And we have a funny suspicion that Apple is going to report or meet or exceed earnings, so that'll be a pretty decent driver of the market higher this week as well. All things going according to plan or going according to research. All right, we should see some really significant numbers on your JNUGs, your NUGTs, your Barrick's Gold, your New Gold Incorporated. But again, guys, the whole point of this piece, coming up on the 18-minute mark, stop losses, trailing stops, please put them in place. Let that be said. Do not confuse what we're doing here with metals investing. We are only trading paper at this point in which to go out and buy metals. Hopefully you guys are prospering. Hopefully you guys are making tons of money and you enjoy what we do here. So we'll do another one of these soon. Stay tuned. Probably midweek. We're going to do another specific equity analysis. And we do maybe have one more that we might do this weekend. That's it's going to be real. It's kind of a longer term play. All right. But hopefully, again, you guys are prospering. You're making the money. You're doing good. You're using the market to your advantage. You're not whining. You're not complaining. You're just making money and laughing your asses off. So we'll do another one of these for you soon, guys. Be good.